In his budget speech of 2006-7, the then Finance Minister P. Chidambaram had floated the idea of moving towards the Goods and Services Tax or GST regime, and the next decade was spent in thrashing out his final contours and mustering the courage to usher in the reform in indirect taxation. Amid much fanfare, the GST was finally rolled out on the midnight of 1st of July 2017 by Prime Minister Narendra Modi. The nationwide reform subsumed 17 large taxes and 13 cesses. And after initial hiccups and tepid collection, the GST revenue has picked up pace over the last 2 years. The average monthly gross GST collection for the first quarter of FY23 has been Rs 1.51 trillion against Rs 1.1 trillion in the first quarter of the last fiscal, showing an increase of 37%. Economic recovery from the pandemic, high inflation, anti-evasion measures, especially against fake billers, and gradual improvement in compliance have helped. But as Business Standards A.K. Bhattacharya pointed out, the total GST collections in FY22 were about 6.26% of GDP compared to 6.22% in FY19, which was both a pre-COVID year and the first full year after the new tax was rolled out. The growth is nowhere near what was expected.
As far as whether GST has been able to fulfill the basic objectives which it had been introduced for, I would say yes. With multiple indirect taxes, there were multiple issues as well, including the cascading effect of taxes, the multiple compliances that one was required to do, the multiple authorities that companies were being made to deal with. So all those issues have now completely sort of eradicated. And I think there are 3-4 things which the government should really focus on going forward. One is to bring in oil and natural gas within the ambit of GST. Secondly, I think they should also make the GST appellate tribunal on fast track. The government should seriously look at is to implement a policy guideline for the functioning of various intelligence agencies and the process that they should follow and what are the real powers of these officers so that there is minimum harassment for genuine taxpayers.
A common complaint is also that the GST system is yet to stabilize even after 5 years because of the rate structure and constant tweaks. It still suffers from bottlenecks. But at the same time, GST is said to be one of the finest examples of cooperative federalism, as the centre and states come together in the GST Council, and almost all decisions are taken with consensus in the larger interest of the country and its people. But some states are unhappy as they stare at a stoppage of compensation for revenue loss from the cess fund due to GST implementation.
I think so far the GST has worked out, I think, reasonably well. There were a lot of glitches, but that's not unusual. Almost every country which has implemented universal VAT, which the GST is, it's taken between 8 to 10 years for the system to stabilize. There will be tweaking that will be required simply because of the multiple rates, the very large number of exemptions. Correcting all of this is both a political issue as well as an economic issue. And I think on the economic side, things are falling into place, but the political side, of course, will continue as governments change in different states. New views are put forward on the structure of the GST.
Businesses say the government should work further on simplifying the tax system to boost the ease of doing business. Taxpayers have struggled with the demands of GST compliance and return filing, although this burden has been progressively reduced.
The few things that stand out has been a very good technology platform by the government, which has been welcomed by industry. Second, what has stood out is a collaborative and consultative measure from the government in terms of interacting and issuing clarifications on contentious matters. In terms of what next, industry expects 3 changes or 3 aspects, I would say: unlocking of working capital, ease of doing business related changes, and input tax credit reforms. Unlocking of working capital is basically saying that the law does allow refunds for exporters and inverted duty structure, But if I'm a domestic business with capital intensive or a long-term gestation period to make a profit, I'm stuck with the credits. There are a bunch of restrictions that were grandfathered from the earlier pre-GST law in terms of infrastructure, in terms of personal consumption, but the interpretation gets a little gray when you apply it to hospitality and tourism industry, for example. There is a hope that when we pause and reflect and look forward, is it time ripe to get away with all of the restrictions such that we have a completely seamless GST credit chain?
The government has been proactive in addressing any major pain points, but there is still a long way to go before GST can achieve its full potential and become a truly good and simple tax as envisaged. Meanwhile, the immediate priority of the government will be tax rate rationalization, as the center and states need higher revenues, and lesser slabs would mean a simplified tax regime.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
क्या हाल?
मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 Paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.